Well, hello everyone. Welcome to Getting Started with Technical Analysis. Cameron May is off today, not feeling well, and I have the opportunity to fill in for him. And I'm kind of excited about today's topic because I am seeing it in many, many places of late. And so what are we going to talk about? Today we're going to talk about trend reversal patterns. And there's a whole pile of different trend reversal patterns out there. There are diagonal resistance breakouts, there are cup and handle patterns, double bottoms, inverted head and shoulders. So if any of these are new to you, they won't be by the time we're done today. And we're going to talk about not only how you can recognize these patterns, but then how you can use them to make more informed decisions in your trading. So that's what's on the menu for today. If you are not following me on Twitter, I invite you to do that. My handle is Barbara Armstrong CS. We have the pleasure of having Mike Fairborn with us in the chat today. He is a friend and fellow coach, and he knows a ton about these strategies and these patterns that we're talking about today. So if you have any questions, don't hesitate to ask. You'll want to follow him on Twitter. Also, somebody was just thanking him for some of his posts earlier today. So he's posting a lot of great content that you won't want to miss. His handle, Mike Fairborn CS. Okay, so now that we've got that done, know that in this class, we're looking at things that are for example purposes only, not to be construed as a recommendation. I think I skipped a page. Here we are. If we discuss options, know that those carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab, and not all will qualify. If we look at a short option position, that can be assigned at any time prior to expiration, regardless of how far it is in the money. In paper money, short options, however, are never assigned early. When we use a stop loss order, that is not a guarantee that we'll get out at a specific price. So what are we going to do today? Well, we're going to talk about some of these trade patterns, and then we are going to look at examples on the Thinkorswim platform as our means of discussion and point those out. Now, just to get us started, and I know that this is a Getting Started series, and in my Getting Started with Options series, I don't typically look at, kind of a market overview. But if we do look at what's going on in the markets, the S&P 500 is up 26% year to date. So it's very bullish. So today, what I have decided to do is look at bullish trend reversal patterns, because really, whether we look at the S&P 500 or the NASDAQ, which hit a new all-time high today, or a consolidation pattern, we could say that we're looking at, it too is up 25% year to date. The Dow is up, 18% and hit a new all-time high on Friday. And then we have even the Russell, which, was going a whole lot of nowhere for a very long time. It too is up close to its all-time highs. And even when we stop and we look at an index, we can see consolidation patterns and trend reversal patterns. We can see them over periods of years. We can see them over periods of minutes if you're a day trader. In this class, we're going to look more at weeks to months. So the first one I want to look at is Apple. And Apple is currently sporting, and I had posted something on X, I believe on Apple, maybe even just yesterday, where if we're playing, as I affectionately like to call it, I spy with my little eye, what type of pattern do you see? And, and I look at so many charts each and every day that my eye automatically goes to look for patterns. And when I see this, I see kind of a cup and handle pattern where it came down to a low here around 199, and it came up not just once, but twice it came up to this 237-ish level, and then yesterday it broke through. And one day does not necessarily a pattern make, but it did break out and it has continued up. And this is a new all-time high for this stock. And so some people might say, well, hello, it's at an all-time high. Wouldn't this be a terrible time to buy? Or you might say, well, this is, yeah, here's our cup and here's our handle. I have some money to invest, but I really am looking for a shorter term solution. And so what some traders might say is, okay, here's how a technician might look at this. And I guess I had done a swing target where we had put the previous high back here. So looks like that trade worked out okay, but we no longer need that on our chart. But the way a technician might measure it is to say, okay, we have gone from 199 to 237. So we've gone up about $38 a share here. So the expectation is that this might go up another $38 a share. So if I take my 37 and add 38, that would be 275 might be a target. And so there are a number of bullish trades that someone could look at. They could look at doing a short put vertical, saying, hey, as long as it stays above 237, I'd have a successful trade. What other type of trading strategy might they use? If they were in the options world, they could look at a long call vertical, at 240 and 245 or, wherever it might be, and say, I'm expecting this to continue to go up. And so if you had a small account, you might look at that strategy, and someone else might say, oh, is she going to talk about options? I just trade stock. Like, I just want to buy a stock. And so, could we not buy the stock here? And we could just buy the stock and put it in our portfolio. And where might we put a stop? Well, we might say we're going to put our stop 3% below this ceiling or this resistance level, which we are now expecting might act as a support level. And if we wanted, that could be the end of it. Or we could say, and when it gets up here around this 275 mark, maybe we make it 273. If it gets close, then we'd like to sell that position if we were looking at a shorter term position. But this pattern started back here in July, and it just broke out here at the beginning of December. So this is not, if we buy the stock and have this kind of target, this might be an investment we're in for months. If we did, a shorter term trading strategy, like a short put vertical or a long call vertical, that might be a trade we're in for weeks. And it just depends on what your goals are and what you're looking to accomplish, right? Right. So let's do an example trade where we have this cup and handle pattern, and we're going to buy 100 shares of stock. We're going to put a target in of 273. And we're going to put our exit at 237 less 3%. So let me close out my drawing tool. I'm going to come to my calculator here and say, what is 237 times 0.97? So that's 229.89 is where we're going to put our stop. I'm going to get rid of this, not this line, but we don't need swing target in here anymore. But we could put our new target in, and our new target is 273. So if we wanted that to show up on the charts, course, it's going to be, above where we can currently see. We'd have to add more lines. If we make this 273, whoops, 273, and that's our target. And that's on the right. So now we can't even see this. In order to see this on the chart, we'd have to come here to our price axis and make this a bigger number up, say 20%. We might be able to see it. Apply. Okay, so now we can see our target. Okay, so we're going to come to the trade tab. We're going to come to this top line and say that we want to buy custom with an OCO bracket, which means we're putting in both our target, and our target is 273, just shy of the technical target, and our stop we're going to put in at 229.89. And we're going to put this into our stock with a target category. And we're going to make a note. Our target is based on the cup and handle pattern. Now, you know what? This is just a note from you to you. Nobody else sees it. There's not a guarantee. Like if the stock were to gap up, it may never go up to 273, first of all, but it could gap up and we could end up out for a higher amount. It also could gap down, and there's no saying that, we get out at exactly this price we're requesting on the downside either. Yeah. Okay, so fire in the hole. Oh, you know what? Just a minute. I can't place that trade in this account. We only have $500 in it. Just a sec. Let me go to the other account. So monitor. Okay, so that trade won't go through. So we're going to practice and get to do it again. Trade, right click, buy custom with our OCO bracket. And our target is 273. Are trading a smaller account. We've maxed it out. And 229.89. Until canceled. Confirm and send. Our stocks with a target, and target based on cup and handle pattern. So these, these consolidation patterns, so this is a stock, it's up 25% year to date. So this is a stock that was uptrending, and then we had this consolidation in the form of a cup and handle, and it broke out to the upside. Now, it doesn't always work that way. So if we look at, let's see, Charter is another example of this. So here we can see that the 200 or the 100-day moving average was kind of downtrending. So if we come out and look at 2-year, we could probably do this on a 1-year. This is a stock that's only up 2% year to date. And if I go back to the 2-year, this thing kind of was like Humpty Dumpty, right? It had a great fall. It went from $458 to $236. And so if you want to see just how big a wound that was, that thing fell by almost 50%, 47%. But when we look at this pattern, it fell, and they say the trend is your friend until it ends. So it fell, came back up to 383, where it had spent about a week hanging out before, and then it fell. came up to this 383, and then it fell again, although it didn't come back as far. So do you see this cup and handle pattern? This same type of pattern? And again, this one took even longer to develop. The last one started in what, June or July? And then this one broke out, and it's just been kind of, you know, so here was our resistance, support. Now, a technician measuring this might say, well, it's broken out, and ultimately, you know, this is about 100, you know, this is a big range, but it's an expensive stock, 143. And you might say, you know, like, how long could it take for this to move up that far? Well, one, it may never get that far. But, you know, two, so what might our target be? Well, if we take 383 and we add our 143, that's 526. And while that may seem awfully high, you know, let's come and look at the longer term on this again. Oh, sorry, I've got to close out my, so drawing tool here. So this could be a target around this 526 level. But are there other ways as a trader that we could look at this? Do we have to go for the target? No, we do not. And if we come back and we look at this over the last year, well, I guess we have to go out further. The last 2 years, it was up here at 458. You know, and so this is still, so could another target be the previous high? It could be. And does that seem unreasonable given the depth of this pattern and the potential target that some might see as a result of this pattern? No, we could trade it back to that previous high. Now, could we also say, well, hey, it's broken out. You know, it broke out back here on November 6th, almost a month ago. And for the last month, it stayed above this 383. Could I maybe come down here and sell a short put vertical below this? You know, below this 383 mark, would I get enough premium for it to be worth my while? And when we sell a put, we're agreeing to buy the stock at that price. In order to define our risk, we're buying a put below it that says, hey, if we're wrong, at least we're limiting the amount we could lose. Because is it possible that it could break back down and come back down to here or here? You know, yeah. So let's go and look and see, could we sell something? It's now trading at 395. Could we sell something around that 380 mark to 385 mark? So if we come to the trade tab, now if we look at, and we're going to be looking on the put side, here's our, this is only 2 weeks out. We typically want to look like 20 to 50 days. But I don't know, could we do something for the next couple of weeks where the market's been really bullish and get enough premium for it to be worth our risk? We're, you know, it's traded 500,000 shares almost, 420,000, but it is a $400 stock. We've got, you know, we want at least 20 times the number of contracts we're thinking of trading. We're only going to do 1 or 2 contracts. We look at this 380, 375, we get paid 97 cents. If we went to the 385, we'd get $1.40, and we're risking how much? $5 minus $1.40, because if we've sold this put and bought this one, if it drops down to 300, we know that we have the right to sell the stock at 380 if somebody makes us buy it at 385. Okay, so if we look at that and say, okay, that's 140 divided by 360, which is how much we could technically lose, that's a 38% return for a trade we're only in for 17 days. And so if we say, well, we'd be okay with that, and we come to single order, first trigger sequence, right click. And if we say, well, our general rule of thumb is when we've got 80% of our max gain, we'd like to buy it back. So we're going to put in an order to say we want to exit this position when it's worth about 28 cents. Now, some of these bigger stocks, their options might trade in nickel increments. So we could make it 25 or we could make it 30. So if this doesn't go through, that might be the reason. But we're going to put this in our short put vertical group. I don't know if I have one here. Well, I'll have to move it. Okay, in this account. So we're just going to leave it, and then I'll create a group for it on the monitor tab. Okay, so we've got that one set up. So what else might be sporting a cup and handle kind of pattern? Well, here's another one, net. And so if we come in and we look at net, we can see, and this maybe isn't as tidy. I put another line in here, but do you see this? Do you see what I see? Let me just get rid of that. Here's our cup. Here's our handle. Broke out. So resistance, resistance, support. And support and resistance aren't finite numbers, they're a range. So, might there be some potential there? How do we measure the range? And then what might we decide to do with that? And part of it depends on what your goal is. Do you want to just buy and hold a stock? All those types of things. Cup, handle, breakout. Okay. Now, so that's just one pattern. There's a couple of other patterns. And one that we've seen a lot of lately, and I'm just going to go through a bunch of different ticker symbols without placing trades, and then we can go back, time permitting, because I want to show you a couple of other either consolidation or trend reversal patterns. So here was a stock and in Nutanix that was really, it moving to the upside, up 36% year to date. So it was coming up and then it got clobbered on earnings and fell, tried to rally, fell again. And so this to me, this is more like a Russian stacking doll kind of pattern, which isn't an official pattern as far as I know. But do we see kind of this inverted head and shoulders pattern here? Do you see it? So it came down to 43, came up to this 64-ish level. And then, what did we have? Just let me get a nicer drawing tool. So, support, resistance, 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 and then it kind of skittered around here. And I said kind of Russian stacking doll because it kind of came up and then came up again. So like a two-shouldered misfit or something. Oh, I didn't mean to get rid of that. Just one sec. So some might say, here's another mini shoulder. Whoa. But it has broken out, and it came almost right back down to that exact line. And I just find that fascinating with technical analysis. And you might be saying, well, when I looked at this morning, it actually was up on the day. And you can come down here and look at, our analysts raising their targets on this. And this is where, when you see a pattern, you then might go and do some digging. Okay, Needham is raising their price target to 90, and Morgan Stanley's raising their price target, and Barclays is raising their price target, et cetera, Wells Fargo, Piper Sandler. And so the analysts seem to be bullish on this, but yet today it was down earlier. It was up earlier. It's now down a bit. Could you put in a conditional order and say, given this continues to go up, I'd like to get in? And then where might your target be? You calculate your target the same way as you would with a cup and handle. Okay. Yeah, somebody said there was rotator cuff surgery on that Head and Shoulders. I really like your sense of humor there, Riceberg. But if we take 44 to 64, that's about a 20-point move, a 20-point range. And so could your target be up here around 84? And could you put in a conditional order to say, if Nutanix goes above today's high, then get me in and put in this kind of target and this kind of exit? Yeah, would you guys like to see an example of that? So let's look at that. So we'll put in this example on the Head and Shoulders front, and then we'll look at a bunch of examples. But so today's high is 66.92. So we might say, hey, if this goes up by 50 cents, so to say 67.42, I would like to buy 100 shares. So, and then I want to exit when it either gets to 84, which is based on that 20-point move to the upside. And there's lots of analysts that have, targets in that neighborhood. Or if it goes back below 64.33 by 3% or more, that's 62.40, then get me out. So both our target and our exit are based on this technical pattern. So we're going to come to the trade tab. We're going to right click on this. We're going to buy custom with an OCO bracket, but we're going to make our entry a market entry. All of these are going to be good till canceled. And we're going to say we only want to buy this if and only if Nutanix goes above, what's the price today? I didn't write it down. Okay. I think it was 60. What's today's high? Okay, sorry guys. Got a good memory, but it's short. 66.92, so 67.42 is our entry. 67.42. Trade. So we want to get it in if this goes above 67.42. Now, if this kind of pulls back for a couple of days and then we get a doji or another candle pattern that indicates it may be moving to the upside, we can change this entry. It's not set in stone. And then we want to exit if it gets to, if and when it gets up to $84 a share, or if it goes below 62.40. Confirm and send. So we want to buy 100 shares of Nutanix if it goes above today's high by 50 cents. We want to exit when it gets to the target of 84, or if it goes below what we are believing will be a new support level. And we're going to put that in our stocks with targets. We're going to say the target is based on the inverted Head and Shoulders. There we go. Now, are there other Head and Shoulders patterns out there? I've posted lots of them on X over the last couple of weeks. Kind of one of the reasons that you may want to take advantage of that resource. How about Steel Dynamics? Do you see that pattern? It came down and then gapped up, wasn't even on earnings, came back to retest. And again, like, one of the things that I think is so fascinating is that it came almost right down to that exact same spot and then has started moving to the upside again. And what's the range? About $30. So where might your target be? Well, maybe around 167. But, there can be other trades that one could place that aren't target oriented. But if you wanted to put in a target, one could do that. Let's see. How about Google or Google, as I like to call it? So, do you see this type of pattern again? It's amazing, right? And once you start seeing these, just come up here. $148, $169. So that's about a $21 range. 69, 89. So a target might be around 190. And it came back and then it's like, ooh, I don't know what happened on this day. But, it had a bad day, came up close to this resistance level and is now breaking out again. So it shows that these don't always, these support this resistance level. It's not guaranteed that that's now going to hold as a support level. Anybody tells you anything is a sure thing, yeah, run far, run fast. Yeah, because there are no sure things in life. But I find technical analysis pretty fascinating. So there's another inverted Head and Shoulders pattern. How about this one, HIMS? Again, are you seeing, that this pattern that I'm seeing? And to me, this is like the ultimate Rorschach test. Just because I see something doesn't mean you see it. And then it kind of broke out. So it's not a perfectly symmetrical, but man, it's broken out again and taking off. 13 to 24, that's an $11, which you may say, well, that's not as much as there was one that was 140. Yeah, but this went from 13 to 24. So that's like a 50% increase. 24 to, 36 would be up here. And look at how high it went, 35. Kind of fascinating, isn't it? Yeah. So these patterns, we can see them repeat. Now, what about a pennant pattern? So here's NTAP. And we had this, series of higher lows, but lower highs, and it creates kind of a squeeze. And then you're looking for it to break out one way or the other. And then with this kind of pattern, how might one measure a target? Well, you might say, if I am looking for a target on this thing, one of the things I can do is say, here's the top of the pattern to the bottom of the pattern is about comme ça. And then I'm going to right click and copy it. And then I'm going to move it over here to where it's breaking out from. And there might be a potential target around this 143.50. And, it broke out, hit this, new high, pulled back, but it's been kind of following along this line, but bouncing again today. And so, does that have potential? It might. It's considered, a breakout of a pennant pattern, or a diagonal resistance breakout because it's broken above that line. Now, here's one that was in a channel. I mean, this thing went to the moon. It's still up, even though it went from $122 a share. Like, this did have a 10-for-1 split. But I mean, you want to talk about a catastrophic fall. Down to 17, that's an 86% fall. And so how much are we going to trust this? Well, if you go and you look at the news, there was some type of litigation. And yesterday it was announced that there's no evidence of fraud. Some of their executives were, accused of fraud. And so good news came out and the market responded accordingly. And so today it was up again, has pulled back a little. It's down, 79 cents over yesterday. And some might say it's still below that 100-day moving average. I'm a little nervous, but this is one you may want to watch because this would be categorized as a diagonal resistance breakout. And how would you measure that? Some might say, well, I'd look at, maybe a target on this if you wanted to have a target. And some people might just say, I believe in this company. I just want to own the stock and, continue to trade. But that could be a target. This previous high where it seemed to consolidate here. And others might look at this line and replicate it and say, this was in a downward trending channel. So it might move as much as the width of this channel. And that's another way you could measure it. So that's a couple of examples of diagonal breakouts. Here's another one, gap. And I drew a couple of lines because, I might say, I see a diagonal resistance breakout here. It pulled back and is now moving again to the upside. Others might say, well, you see that, Barb. And, and you could say, I see this pennant pattern where we had kind of more like a series of equal lows and lower highs where it broke out. And you could measure it again the same way of going from here to here. I'm trying to make my lines straight. And so where might a target be? Up here around 32 maybe? Or could your target be the previous high? Absolutely. Now, others might say, well, that's how you see it, but I'm going to clear this. What I see, and there are no right or wrong answers definitively, but you might say, this is what I see. I see that, we had this double bottom pattern and it's now breaking out. And you'd measure it this way. So maybe not the tidiest example on the planet, but there we go. And then to wrap things up, and then we will be out of time, but we have a stock like NVIDIA, where some might say, well, this is a bit, it's either kind of a very lopsided double bottom, because it didn't come all the way back down, or something with a really big handle. But it's, regardless of how we name it, it's a consolidation pattern, isn't it? Where came down and then like, so ceiling, I still think of this as ceiling and floor. Resistance became support, support, support. So this line around this 130, 131 mark seems to be significant. and it's come down and tested this 3 times. And the way I kind of look at this is, my father-in-law was really big on medieval history, and so visions of knights in full armor come to mind. And every time it comes and bounces, I see another knight coming in to guard this line. I think the more often it comes and touches, the stronger this support level is. That doesn't mean that someone can't break through. If you have a lance or, a battering ram or something, it could come back through here, but could we do something like selling a short put vertical? Could we buy a long call vertical? Could we just buy the stock? If you'd bought and held the stock over the last couple of years, you'd be a pretty happy camper. It's up 182% year to date, but does that mean we've totally missed it? It does not. Okay, so these are just patterns to look for in the wilds of looking at the charts on Thinkorswim. These are, either consolidation patterns that can lead to a trend continuation in the case of as in the case of NVIDIA, or they can be trend reversal patterns. I'm glad you like the Knights analogy. Yeah, I kind of like it too. Okay, so guys, that's a wrap for today. So we did place a couple of example trades. I think it's important when you are learning new strategies or new concepts to kind of look at how that works and how that can help complement your investing or your trading. So we bought 100 shares of Apple, and then we did a trade on Nutanix where we put in a conditional order and we said, we only want to buy if in fact it continues to go up. And so technical analysis, can lead us to making more informed decisions. And with Nutanix, what if it comes back down and we end up not getting in? Well, then we saved ourselves from placing a losing trade. And how cool is that? And if we do get in, let's say tomorrow when we're, out golfing or walking the dog or whatever, and we get in, then we can pat ourselves on the back for having the foresight to plan ahead to get in as soon as there was an entry. So there we have it. Well, guys, I want to thank you so much for joining me. And just before we wrap, here's my ask of you. If you would, don't forget to follow us in the land of X, Mike Fairborn CS and Barb Armstrong CS. I think that you'll find that there's a lot of really great content there that you've been missing. So follow us there. If you would do me a favor and hit the like button. First of all, it lets Mike and I know that you found this class worthwhile. And it can help us move this up in the YouTube algorithms, the more people that hit like. So as I like to say, you could be doing a favor for a random stranger who you will never meet, who might find this content because you hit the like button. So hit like, subscribe to the channel if you haven't done so already. There's lots of great stuff out there that you'll want to be able to access. And there's no charge to subscribe, just like there's no charge to attend these things or to follow us on X either. So thanks to Mike Fairborn for all his help in the chat. Thanks to the people behind the scenes who help bring this class to life. And thanks to each and every one of you for showing up here today. I appreciate it. Take care, everyone. We'll see you in a webcast coming up soon. If you haven't had enough of me, I'm filling in for Connie Hill tomorrow on choosing an option strategy, I think it's called. So we'll see you there then. Bye for now.